go through live mortgage rates and then do a deep dive into a different loan topic every day. And today's topic is going to be VA and USDA renovation loans. We will get started here in just a moment. We're just waiting to go live on all the different platforms. We are streaming this live on YouTube, Facebook, and LinkedIn. And we did put the chat up on the screen. So for those of you just tuning in, as you tune in, feel free to drop a comment there in the chat. We appreciate any comments, and we'll get started here shortly. And as we continue through the presentation, you can feel free to drop any questions you have as well there in the chat. We'd be more than happy to answer any questions that anyone has. I see some people tuning in already, dropping some comments. Thank you for the comments. Adam, Ashley, Victoria, Clement, Warren, appreciate that. We'll get started here in just a moment. Jason, thank you for the comment from LinkedIn. And it looks like we are live on all the different platforms. So again, as you tune in, keep dropping comments and feel free to drop any questions that you have, but we'll take the chat off the screen for now. Welcome everyone to Daily Rates Live with the Mortgage Calculator. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every morning here is go through some live mortgage rates and then do a deep dive into a different loan topic every day. Now, today's loan topic is going to be VA and USDA renovation loan. So some people don't even know that these exist. And even if you do, there's definitely some nuances to it. So our sales manager, Jose Gonzalez, with 28 years of experience as both a loan officer and a realtor, is going to go in depth into VA and USDA renovation loans shortly. But before we do that, we'll do what we do every morning, which is pull up live pricing for some different mortgage programs and go through that. So Nick, if you're ready, let's pull up our pricing tool and see what the market is looking like this morning.
All right, let me switch the graphic here. It's a pretty cool house they're building there on that graphic. I just noticed they have a Buddha room in their house plans. Never heard of that. All right. And this is our pricing tool for our team of mortgage professionals here. This will show us the general rates and the APR. For today, it is September 19th, just after 11 a.m. Eastern. So all our general programs are live. If you'd like a full breakdown of all of the fees that go into the APR, please get with our team members. We have over 400 licensed loan officers that can send you a full itemized loan estimate. And we can do our USDA and VA loans, the topic for today, and other primary loans in 24 states. And then we can do our investor DSCR loans in 44 states. Now for today, for the pricing demo, we will set up a scenario we can compare across the different programs. So we'll set a loan amount of $400,000. We'll set the LTV to 80% loan, 20% down payment. We'll set the desired price to $99. That means we'll ask the computer to find the best rate at one discount point in cost. And we'll compare our programs. We'll start with conforming conventional, then we'll check out our FHA programs, and then we'll go into our expanded guidelines, also known as non-QM, where we have over 5,000 additional programs with alternative income. VA and USDA, we don't do live, but Jose is going to do some examples today. Remember, VA is only for our eligible vets and active service members, so if you are eligible, let us know. We can quote it, no problem. And USDA is only for eligible properties. So if you do happen to be shopping in one of those USDA eligible areas, let us know. We can quote it. And today, Jose will have a couple examples for those programs. But for live pricing, we always start with conforming conventional. We'll do a purchase, 30-year fixed loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score of 760 and an estimated debt to income ratio of 40%. So with these basic settings, let's see what the conventional rates are looking like this morning. Not much change, same as yesterday here, 7.375 rate, 0.875 discount points and costs. Final APR, 7.538. So hopefully once the Fed has their announcements, we see some movement. Hopefully it is downward, but we'll have to see later this week. Now, if there's any reason our customer doesn't qualify for conventional, which is usually the first option that we look at. The next option we typically want to take a peek is an FHA program. So FHA does allow a little more leniency on credit issues, as well as a much higher debt to income ratio we can go to. However, to keep everything comparable, we'll keep everything identical so we can compare APRs directly across the programs. So again, FHA about the same as it was yesterday, 6.5 rate, 1 discount point in cost, final APR 7.092. So in this case, FHA, if our customer qualifies for both, is about a half a point cheaper today. But of course, that's all going to change here with some recent announcements, I'm sure. And our customers that must use FHA, definitely a welcome change that they have there. These APRs do include the upfront mortgage insurance and yearly mortgage insurance that is required for all the FHA programs. Now, where we love to specialize is where if our customer doesn't qualify for either program, many other banks or lenders unfortunately have to deny those borrowers. But that's where our team at the Mortgage Calculator has over 5,000 additional loan programs here under expanded guidelines, also known as non-QM, where we can use alternative income. So we'll keep everything else exactly the same, but when we select non-QM, we get a new option for income. So full doc is what we use for conventional and FHA. So typically if we're trying to do a non-QM program, it would be to take advantage of one of the alternatives here. So asset-related programs, we have business bank statement programs, our investor programs are for investment properties only. We'll do one of those in a minute. Personal bank statement 12-month is the most popular program we have. That's what we use. We also have RSU, stated income, BOE, 1099, P&L, and no income CDFI. Tons of different options. The most popular is our personal bank statement 12-month, and that's for our self-employed borrowers. Many times when our self-employed borrowers submit 2 years of tax returns for conventional or FHA, they may have various write-offs where they don't qualify at all, or they just don't quite get enough income to get that home they really want. So we solve that problem for our borrower here using no tax returns at all, just their last 12 bank statements, to determine a new debt-to-income ratio of 40% in this example, using just their cash in the bank, no tax returns at all. So most of our self-employed borrowers will qualify for double or triple the income and can therefore get the home they really want. So let's check out our non-QM solutions today. And not much change here either. 7.5 rate, 2.625 discount points of cost. So non-QM does have a little bit higher cost, but you see here the APR comes in at 7.621, just a touch above conventional here. We were actually beating conventional a couple weeks ago. So non-QM right now, very comparable to conventional. Definitely recommend our customers that might need a little bit of extra help. Definitely check out our non-QM programs. Also, you see we have hundreds of different variations here, some at a little bit higher rates and costs, may allow other issues such as foreclosures, bankruptcies, other types of credit events. So definitely get with our team. They'll find which of these hundreds of versions of our bank statement programs work best. And before we go into Jose's examples, we always do live pricing for investment properties. So whether they're a first-time investor or a seasoned investor, we love to help our investors check out different scenarios. So we'll set up the same scenario here, 80% loan to value, 20% down payment. And we'll compare our programs for investment properties. We'll check out conventional, conforming, and then we'll go into expanded guidelines, aka non-QM. Remember, the government programs, FHA, VA, USDA, are not eligible for investments. So we'll start with conforming conventional. Everything else will stay exactly the same. The only thing we've edited here is the occupancy. So let's see what the conventional programs have added to investments. And again, it's about the same as yesterday. 7.625 rate, 3 discount points in cost, puts our final APR at 7.858. So it's a good option for our customers that want to qualify conventional, but most of our investors ask for other options. Unfortunately, with conventional, there are no higher rate options the computer was able to find with lower discount points. So the best combo the computer found ends up being 3 discount points, which is $12,000 in this example. Most of our investors would like an alternative quote to compare. in order to reduce those costs and spend that $12,000 elsewhere. So that's where we come with our final example here. Set up investment properties, set up ADLTV again. And this time we'll do our non-QM expanded guidelines programs where we'll have some more flexibility to meet those needs of that investor. So the first thing we must select under expanded guidelines is our income type. The most popular income type for an investment property is going to be our investor DSCR program, and that's because it doesn't actually require any income or employment from our borrower. We simply use the estimated rental income from the property to determine a DSCR ratio. It stands for debt service coverage ratio. If the estimated rents can cover the PITIA of the mortgage payment each month, aka the property cash flows positively every month, that's a ratio of 1.0 or higher. And we even have options for ratios under 1.00 where the property does not cash flow every month. For the demo, we always put 1.5, which is the highest, so we can see all the options pop up. And finally, a prepayment penalty is standard for these programs. 3 years is the standard. That's what we select for our demo. We can choose 0. That will limit the amount of loan programs that show up and cost more. We can also choose 5 years, which will again limit the amount of loan programs, but save our customers some money for those programs that do allow it. Since 3 years is the most common, we will always select that for our demo. And let's check out the DSCR rates this morning. All right, best option at the top here, 7.99 rate, 0.85 discount points and costs. So obviously our investor here has the discount points they're looking for, and the final APR of 8.052. So almost identical to conventional. Remember, 7.8 and change, and here we are just at 8, so about 0.2 or less away from conventional. We actually beat conventional a couple times last week for these programs. So most of our investors that compare a DSCR or other non-QM example to conventional at this time will choose our non-QM options. Not only are they almost identical in cost, but a lot of other flexibility that's afforded there. And most importantly, they save discount points, money out of pocket. So there's a ton of different options. Please get with our team. Some of these options at higher rates and costs may allow bankruptcies, foreclosures, other issues, as well as a very popular request, short-term rental income can be used to document the income on some of these programs. So definitely get with our team to find the one that fits best. And now let's get into the examples that we can't do live typically, which are our VA and USDA examples. So these are obviously special government programs. They have a little bit of restriction. I always mention it every day when we do the live pricing. So we usually don't pull the live pricing on these. But Jose is going to go into some detailed example of the VA and USDA renovation programs, which is a particular subset of these programs. They are both similar in that these programs, as I say every day, remember the VA requires an eligible borrower who must be an active service member that has their eligibility, or a veteran that has their eligibility, or there's also surviving spouses that can have eligibility as well, which I don't always mention live. And USDA, very simple, the property must be eligible, as in the actual location on the map. So those are kind of the basics. I'll let Jose go into what makes the renovation loan special. So if you're ready there, Jose, let's go ahead and pull these examples.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Great to be with you this morning. So we love discussing our renovation loans because they give our borrowers, who are also the buyers, many more options to purchase properties with their high LTV loans. It's pretty difficult in tighter inventory markets to get your offers accepted when you are using a high LTV loan. And on top of that, we just have very limited inventory in many of the markets. So this does open up a whole other segment of inventory that would be available to our buyers slash borrowers when it's a purchase, or if it's a refi, give them other options other than needing to sell their property in order to have a property that would more suit their needs. So as Nick mentioned, the VA loans are for borrowers with a military entitlement, and our renovation loans are for rural area properties. You would need to go to the USDA geocoder, plug in the property address, and see if it qualifies for USDA financing. So, renovation loans do allow closing on properties with condition related items that would normally not be possible with a standard loan that does not employ the renovation option. The USDA option is for 1 unit properties only. 2 to 4 unit properties are not eligible. So, besides being restricted by the location of the property to rural areas, they also limited to 1 unit property, as they really do not want any type of investment income from these properties. They are made for areas that are usually going to have lower income than than your more urban areas. Repairs above, there is a limited option and a standard option for the USDA renovation loan, similar to the FHA 203K that has a streamline option and a standard option. The limited USDA option does require projects that are above $35,000 using a HUD consultant to review the repairs and ensure that everything is in line with USDA guidelines for the property. Raising of the home down to the foundation, for example, on a USDA loan, is not allowed. Eligible repairs would include removing safety hazards, disability access, septic and well repairs or installation, additions or structural alteration, modernization of kitchens, baths, interior flooring, exterior siding, and repairs of existing pools. Ineligible repairs would include, for USDA, new pools, repairs to manufactured homes. So please note that USDA does not allow repairs to manufactured homes, nor do they allow repairs to condos, even though I don't know how many condos there would be in rural designated areas. Also, does not allow converting structures like a barn, for example, to a single family residence. It does not allow alterations to provide income producing features, does not allow the installation of luxury items, does not allow removal or repairs of fuel tanks, nor tear downs to the foundation. For the VA loans, uh, there is a limit of $50,000 above which you would be required to use a HUD consultant. Uh, and repairs above $200,000 require a second level project review. The VA renovation loan also cannot be used for a complete tear down and rebuild. Eligible properties are primary 1 unit, 2 unit, and manufactured homes. All have to be primary. So you will note VA does allow for a manufactured home repair and a 2 unit property, also known as a duplex, whereas USDA does not. Some eligible repairs would include interior structural, private water systems, and a second story addition with second level review. Ineligible repairs would include any repairs to an oil tank, private waste system, mold remediation, and here's a very important point. This is where the VA loans will deviate from the other renovation loans that we have. VA does not allow any repairs that make the home inhabitable. So somehow or another, you got to figure out the logistics of your project to to have the home remain habitable, or else VA will not approve your project. So let me share these rates with you. We have some great rates here. So our renovation USDA 1 unit purchase, 100% LTV. And we have 7.75% with, and here our loan amount is $500,000. So that's about a quarter point actually right there. 7.75, our lowest cost option. And our lowest rate option is 6.5%. So this is a standard renovation USDA. Now, our limited renovation USDA, the one that caps the repairs at $35,000, you're looking at 7.25% as our lowest cost option, just a little bit under a point for that one. And you can buy that down to 6.5% rate. And our renovation USDA 1 unit refi with repair escrow. This renovation type loan allows a repair escrow of up to 10% of the loan amount. Repairs need to be completed within 6 months of closing, which is pretty standard for all of these renovation loans. They really want a 6 month or less time frame. And here we're back similar to the rates to the purchase. 7.75 is your lowest cost option. That's a quarter point there, 0.25. And you can buy it down to 6.5%. Now, our VA options here. Now, like I mentioned, VA does allow 1 unit and 2 unit and manufactured home. So this is our 1 unit, 100% LTV. So you're looking at 7.75 with 0.1 point there cost roughly. And you can buy this down to 6.25%. So slightly better rate for the VA than for the USDA. And our 2 unit property, right, or duplex property, same exact rate. So let you all know that there is not a loan level price adjustment for the 2 unit property. So this is a great option for VA. And we've done a few of these VA loans standard for 2 unit properties. Great for a house hack. So you have 7.75, your lowest cost option, and 6.25, your lowest rate option. And our last example here is a VA renovation refinance of a 1 unit property at 100%. So again, you'll note here, same exact rate, 7.75 with roughly a 0.1 point cost. And you can buy that down all the way to 6.25% with a cost of just under about 2.5 points. So as you can see, these are amazing 100% LTV purchase and refinance options, because in this example on the refinance, you're not cashing out, so to speak. The cash out is going into the property to increase the value of the property. Which, the other thing to note that I did not mention in my introduction of this topic is that the real limiting factor to these loans are going to be the after repaired value, because you're going to have an as is value, which is the present value of the property. You're going to have your renovation budget, and then you're going to have your ARV, which is your after repaired value. The loan to value is going to be based on the after repaired value. So if after review and appraisal, the appraiser deems that it is worth what you need it to be worth, maybe it's a great deal. Maybe an ARV, the as is value was 150. You put 50 into it, and now it's worth 225 because the property is just in such great condition and all that good stuff. That's great. You would be good. However, if your ARV is 175 and you put in 50, unfortunately, at that moment, you're probably going to have to reduce the scope of your work down to $25,000 because that is the only amount that you would have available for repairs, taking into consideration your as is value and your after repaired value. If there's only $25,000 difference, that's the limit to your budget.
All right, great stuff. I don't see any questions. If you need any more info on these programs, you can visit us at themortgagecalculator.com. We appreciate everybody tuning in. Remember, we do this 11 a.m. Eastern every single weekday where we go through some live mortgage rates and do a deep dive into a different topic. So we'll be right back here tomorrow with a new topic. Thank you, everyone, for tuning in. Thank you, Nick. Thank you, Jose. And we will see you tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.